Hiya, folks. Excusez-moi. Just doing sound checks, making sure that everything works. And welcome to the live stream, those of you who are here. Let's just check volume. Testing. Let's just check volume. Perfect. Welcome to Friday, folks. Thanks for joining the live stream. Good day, Amit. Wonderful to see you. Camera's over there. I keep on looking at the screen, but the camera's up over there. And two Amits. Welcome Amit Singh and Amit Mystery. Excuse me. I seem to have developed a frog in my throat. We're just waiting for everyone to come in, folks. So hey, Fatima, nice to see you. Hey, JM from Norway, fantastic. From the dark part of the world at the moment. Good day, Achal. And HR from Florida. Someone keeps on trying to phone me. I don't know why. Hang on 1 second. Carol, I think it's animal welfare trying to call me. Sorry, folks, we're adopting a little puppy, and I think that's animal welfare phoning me to find out if they can come and do an inspection. But I'm not going to answer that now. My wife will answer it. So good morning, folks. We're just waiting for another 3 minutes, and we'll start today's session. For those of you who have joined already, we are now short on natural gas. If you're interested in trading natural gas, I've just put an arrow there. We got short a couple of hours ago, actually, right at the top there on that Fibonacci retracement. We'll cover that shortly, but just in case you're wondering what's going on with natural gas after that massive short squeeze, we're now short and in some profit. There goes the phone again. Looks like it might be one of those sessions. Good morning, AS. Shorted 300 Boyle. I hope you won't be burnt. Greetings from Lithuania. Good day, Jaydeep from India. Wonderful to see you. And Tomas, as usual. Welcome, Tomas. Always good to see you here. And Johannes, or I suppose you say that in German, Johannes, like we do in South Africa, from Bavaria. Lovely to see you. And Mirksny de Miroj from Croatia. Very difficult to pronounce those names, those particular sorts of names, but welcome to you. I hope I got that right. Mirtsi? Something like that. Wonderful to see you. So it's been quite a week, folks. We've had all sorts of moves on different markets, and hopefully we'll finish off this week strong, actually. I think we're doing okay. A couple of good trades on so far, which we'll go over shortly. Good morning, the General Shop from Canada. Soon to be either part of the EU or the US. Which one's it going to be? I see your Prime Minister was being very pally-pally with the European ministers overnight. And with that idea being floated, I don't know why Canada wants to be anything else apart from Canada. I have no idea, but there you go. JM still holding short from 2635. I'm not sure what you were talking about there, JM. Let me know more clearly in the comments. I'll also try and remove the comments whenever I do a video. I normally leave these on by mistake. Okay, folks, so what I'm going to do is go through everything that we've got on the charts here very quickly in sort of 10, 15 minutes, and then I'll open it up to discussion. If you've got any questions, please put them up right now so that I can scan through the questions when I've done my monologue, and we can then go through some of the questions and queries that you have. But let's get started straight away. Market opens in 1 hour, so I would like to be finished, 20 minutes ahead of that. So let's start with energies, and let's talk about natural gas. Now, what I need to do is show you the natural gas chart here on my broker at Black Bull Markets. Talking about Black Bull Markets, if you'd like to join Black Bull Markets as you use them as your broker, they also offer free TradingView Pro charts. There's a link below in the description. This is where we are in the NYMEX or the Henry Hub price from the NYMEX. This is not my broker at Black Bull, but I just want to have a look at this quickly. Do you remember I had this arrow drawn in here a few weeks ago, maybe days ago, maybe a week ago, week and a half? And I said, if we retested the underside of that trend line, it might be a good place to go short. Now, look what happened. So we were long right from the bottom here. We eventually got out of our longs about halfway up this move. I didn't get all of the move up to the top, but we maybe more than half, probably about 60% of the move. But we took that twice. We've had two really good long trades on natural gas, each of them about $1 or so. So a fantastic couple of months really on natural gas, the last two contracts. We're rolling into the next contract next week, and Black Bull, my broker, has already rolled over. But this is where we are in the Henry Hub NYMEX price. Look what happened yesterday. We made a new high, breaking through that potential double top high at the underside of this long-term trend line. When I say long-term, it goes back to sometime last year, October last year. And we touched it and immediately got rejected after making a piercing new high. Now, this is called a dark cloud cover candle pattern. After making a new high, the body of this candle, yesterday's candle, closed more than halfway down through the previous bullish candle. So that's called it's not an engulfing candle, but it's pretty similar. It's called a dark cloud cover candle pattern. And it's a very reliable reversal pattern, particularly if we spiked out through a new high, but didn't close above that previous high. That's really, really important. The fact that we didn't close above that high means that high has not yet been invalidated. And in fact, we closed a lot lower than that after opening at that high, moving down, forming this dark cloud cover candle pattern. And all that was left to be done was to wait for a retracement. Now, because this market is rolling over next week, here's the little label. On Wednesday, the 26th, we roll over from the March to the April contract. Because of that, and because my broker's already rolled over and I don't want to get involved in the rollover, there's currently no contango or backwardation, or very, very little. I don't want to get involved in it anyway. So instead of trading the futures, which I normally do at Black Bull, I'm now trading the continuous contract at Pepperstone. There's also a link below if you're interested in trading at Pepperstone. It's my other broker that I use mostly for things that I cannot or don't want to trade at Black Bull for various reasons. One of them is because of the natural gas rollover coming up, or that's already happened at Black Bull. So I'd rather be trading the continuous contract, which Black Bull doesn't offer. So we've got this contract, this price on Pepperstone. Notice how there's that dark cloud. This is the 4-hour chart. Let me go to the day chart. There's the dark cloud cover candle pattern. Not quite as high and on the open as it was on the Henry Hub, but very similar candle pattern. And notice how from the bottom, we retraced 61.8% up to the 618 fib, and we've now moved down. It's easier seen on the 4-hour chart. If we have a look at the 4-hour chart, you can see exactly what happened. There's the move down from the top. Remember, we got long at the bottom here. We got out about 60% of the way up, and we moved down from that high. And remember, on the previous chart I showed you, let me quickly remind you, that high is equivalent to the underside of that trend line on the natural gas futures price. So let's go back to this continuous price. And we moved down from that high, made a bottom, rushed back up again, just to the 618 fib. And that's where we got short, at the 61.8% Fibonacci level. And we're now moving down. I've got this path in here drawn, which sort of illustrated where we could go from reaching this point. And my initial reaction or initial thought was to wait, to see what would happen if we and when we got to this point, whether we would then carry on moving higher up towards $5 or move lower back down towards 375. As it stands, it looks like because of that reversal candle and the way the price has moved since then, it seems like we're going to be trying to head down to the next support level. The next support level is at $3.75. It's always been a key number in natural gas trading, $3.75, $3, $2.50, and so on. We've got the key levels all mapped out. Have a look at some of the previous videos. I'm not going to waste time doing that. We've already spent a lot of time on this natural gas. So the target is 375 all the way back down here. Notice it's also where the 100-period moving average, the 200-period, all around about that sort of price level. So pretty simple trade in the end. We got long at the bottom. We got out 60 to 3/4 of the way up. And we've now got short after making this big reversal pattern at the top here. And we're now short for a target of 375. Pretty simple. Remembering that the rollover's on Wednesday, there shouldn't be a big rollover gap, but there could be a gap this weekend, depending on any weather pattern changes, any geopolitics. There's all sorts of things going on right now with Russia, Ukraine, the Middle East. If there was ever a smorgasbord of political uncertainty, we've got that right now. Interesting how gold, and I know there's all sorts of talk about physical gold in Fort Knox and in Europe and in the UK and Russia, all sorts of weird talk about what's going on with gold. I don't believe any of it, quite frankly, but gold has not rushed up with all this uncertainty. In fact, if anything, it's been trying to make a top. We'll come back to gold later. So that's where we are on natural gas. We still remain short on WTI. Excuse me, crude oil, looking for this to continue moving down towards Moab, the mother of all breaks. There's my label. I just squish it in. You'll see Moab stands for the mother of all breaks. Big, massive, flat bottom break. Been tested once, twice. You know, I don't know how many times. I'm not going to count them all, but a lot of times. But on three main occasions, really, 1, 2, and 3, where we are currently. So 3 attempts with a descending triangle at the top, or descending trend line at the top. We're working within this descending or falling channel, and we're looking for a move down to the bottom of the channel. Once we break down through that level, Moab, this move down following this red path could be very, very dramatic and sudden, and we could actually move faster than this arrow is drawn. Target for the WTI short trade is into the 50s, 60s. Let's start with 60s and then into the 50s. So, and maybe even much lower than that. So that's where we are on WTI crude. Same sort of thing with Brent crude. Those patterns look very, very similar, although Brent crude did make a more definitive top at that level over there. And a much nicer flat top with multiple rejections. The third rejection just being 2 days ago. So it doesn't look quite as neat on WTI, but that's moving down, angling down more steeply. We're also long on URA, but not UEC currently. And URA is just uranium. One of the uranium instruments. There are several that you can trade. This is the one I prefer to trade. What we have on uranium here is another flat top. Looks like it wants to break. Now, our long position is from where we are at right now, and it's worth a go. In fact, I've been holding on to this long position since I drew this arrow in, and that was in January. We're now in February, almost finished February. But if we do break down through that bottom there, then we should probably expect this to move down quite dramatically. And in fact, we're just resting precisely on that slightly angled flat bottom at this green order block right here. If we do break down there and don't bounce off here this week and start moving down, I expect we should see URA dropping down to 26 and then potentially down to 24 or even 23 into this order block down here. The way it looks to me, pretty precarious. We're making lower lows. We've got this flat, not quite flat, but it's flat, but it's not horizontal bottom, and a push through there should see us moving lower. I'll use those opportunities to buy more URA if we get them. We don't have a huge, massive position on here, so we've got plenty of space to add. In fact, I'd like to be getting this at a lower price if possible. Right, having said all of that on energies, I'll come back to the questions if and when they arise. But first of all, I want to go through quickly some of the other things. Euro, the pound, and the dollar yen, and the dollar index in general. You know, I've been battling with currencies the best part of 3 months now. First of all, short on the dollar yen, which didn't work out for quite a long time. We eventually got our short. I'll be completely frank. I started buying a little bit over here, and I've bought a little bit down here as well. Just thinking, actually, we got out of that trade earlier this morning. We bought at the bottom, got a little bounce, about 90 pips. But very difficult to determine what the dollar is going to do. My feeling is that we should expect a weaker dollar looking at the charts, but looking at the politics and what's going on in the world, there's a very good argument for a stronger dollar too, which would mean a stronger dollar would mean a weaker euro, weaker pound, and a stronger dollar yen. As it stands at the moment, we've been stuck in these ranges. If you look at the euro, for example, the dollar yen's been moving a bit, but the euro been broadly stuck in this blob since November last year. This is when crypto started rallying, if you remember. As crypto rallied, the euro dropped off and the dollar rallied along with crypto, which is quite unusual. So what's going to happen next? To be honest, I haven't got a clue. But I do know one thing: we're long on the euro, we're completely hedged on the pound, and we've still got our dollar yen positions open. In fact, I'm now slightly biased to the long side on dollar yen rather than the short side. So I've got a long on dollar yen, a short on the euro. If those both move in union, in other words, if the dollar, sorry, I've got a long. What did I say? I've got a long on the euro, and I've got a long on the dollar yen. I'm long on both of them. So it's kind of hedged in a way, although the dollar yen does move independently quite a lot. But if the dollar starts strengthening, the euro will fall down, the dollar yen should rally, and vice versa. Currently, I'm in the long direction on both of these. In other words, opposite directions against the dollar. And I don't know what's going to happen next. The only thing we can do, we also got a short on the Swiss yen as well. Talking about Moab's mother of all breaks. Let me just quickly cover this before I go to the dollar index. We've got another flat bottom, very much like crude oil or WTI. Once we break down through that level, we should see an acceleration down to the bottom of this order block on Swiss yen. That's at about 161 and 161.80. And potentially, look at this chart. If you haven't looked at this for a while, you'd be quite surprised. Potentially, we could move all the way back down into 142. That's about 2,500 pips. I'm not banking on that just yet, but I wouldn't mind a move just down to about 160, 162 or so. That's still 500 pips. So that's the Swiss yen. And so we basically got a long on the euro, a long on the dollar yen, and a short on the Swiss yen. A real mixed bag of fish. Now, dollar index, the reason I think that we could carry on moving lower is because we've still got some space before next support on the dollar index. We've broken down through this long-term trend line. We had a beautiful breakdown, retest, and then a move down. We called this out some time ago when it actually happened and said we should be looking to short the dollar there. And that short in the dollar mainly played out in the dollar yen. We were short the dollar yen, but we managed to get what happened here on the dollar through that instrument. But are we going to bounce here off the 100-period moving average? Are we going to forego a move down to here? Or are we going to get much lower and back into this overall range, which we're back into already? So we've broken down through that previous high. Here's the long-term range. Could we fall back into there and even down to the bottom? It's quite possible. So I'm pretty undecided, and my currency trading hasn't been that easy over the last couple of months, since the election. And I think there's a lot of uncertainty about what the dollar is likely to do, what best for the American economy would be. And I posit to you that a weaker dollar would be better for the global economy in general. A weaker dollar would be beneficial to overall growth, not only in the US, but other countries too, who basically owe money in dollars with very weak devalued currencies. So that's where we are on currencies. Not very exciting, not very interesting. What we do have here, though, is 2 trades going to stocks. We only have 2 trades. First trade the most recent thing that I just did, or trade that we just took, which you'll know about because I published this widely, was we got short right at the top of the German 30, the DAX, the Xetra DAX, for those old timers. We got short on the Xetra DAX right up here, 22,870, and we took profit this morning right at the bottom of this move. So we're at the top Bollinger Band, which is kind of weird. We're meant to be inside the Bollinger Band. Now that we've reached the top of the top Bollinger Band, it looks like we might bounce off the Bollinger Band again, which is pretty unusual. But there you go. It's a strange old market at the moment. We're also short, and that's the only other trade that we've closed out recently. But we're also short on the NASDAQ, and I'm pretty sure this is in danger of being stopped out. I don't use stop losses in these instances. I'm going to use a hedge, in which case I'll just completely hedge every trade that we have. So let's say I've got 10 positions open or 10 lots. I'll just buy 10 and keep the shorts open at the same time. Now, notice where we are in this big long-term channel on the NASDAQ. I've got a couple of tiny little green blobs at the top and the bottom. That's the short-term channel, this purple line. There's a longer-term channel above that too, which we could quite easily reach. And for that reason, I'm going to actually clone this little thing, little circle. And oh, it's put it right in the correct place for me. That's perfect. And just put it onto, if I can grab it, I won't be able to grab it. And just put it onto this trend line at the top here, something like that. All right, that'll do. So notice that we're almost at the center line of this big green channel. There's the dotted center line. We're pretty much just resting slightly above it. And we've got targets. The short-term channel top could take us up to 22,800. And the long-term green channel top, the much more important one, could see us moving up to 23.5. Or if we break down through all these various things in the short-term vicinity, we could get all the way down to 19.5. So that's where we are, pretty much diddling in the middle. But let's zoom in a wee bit and see what it looks like and where the obvious obstacles are. We seem to have broken out of that big options wall, which was holding us within this triangle, which is now being defeated. So for all intents and purposes, we've actually turned bullish, having broken out of this triangle pattern, having made a new all-time high, a little bit of a spike low yesterday and today just moving higher. Doesn't mean we're going to move higher today, but certainly looks that way. And we've got all the moving averages below us, the 20, the 50, 100, 200. So nothing particularly bearish about this. And that's why I'm willing to hedge or stop out this trade very, very quickly the moment we start moving higher above this level. That will mean that we have a small loss on this trade, but still plenty of room to add because I've only got a relatively small position on this. I'll be looking for shorts. If this one doesn't work out, I'll be looking for shorts higher up into those levels which I pointed out, the top of the short-term purple channel or the top of the green channel. And I might even actually turn my attention to the long side if we start moving up quite firmly and aggressively. So keep that in mind, that we are diddling in the middle. We're right in the center of this triangle. We're almost at the long-term channel center line. I've got short positions on. They look like they're in jeopardy right now, and that we could move up. If we break down, we've got to get back into this triangle, down through the short-term trend line, down through this green horizontal line, down through the 20, the 50, the 100, and the 200, all the way down to the bottom of the channel. That's going to take some work to get there, considering that even though the market's slipping in, or was actually a few days ago, slipping into fear, the fact that we're slipping into fear means what I'm trying to say is that even though we could do that, the fact that the market's at these very high levels, if it's not in fear today, it's probably moved out of there a little bit. But if it's near that fear zone, then there's every reason for this to start rallying. The market normally rallies when we enter fear or extreme fear. Unusual for it to be at the top of a trend, though. So when it comes to NASDAQ, basically it looks long to me, and we might have to hedge this trade, barring anything that might change today. Looks like it won't be a free fall Friday. We have nothing else on any of these other names, and I'm not planning to put anything else on probably until next month, which is only, I don't know, a few trading days next week. I will be looking potentially to shorten video. These are just my thoughts and ideas. I'm not going to detail them right now. Potentially buy MSTR. I've got a big sign there, as you can see, buy me. So potentially buy MSTR. I'll get to some of the questions later, folks. Thank you for joining. I really appreciate it. It's wonderful to have you all here. I'll get to the questions as soon as I've finished. So potentially long MSTR, shorten video, long Coinbase. I see Coinbase in pre-market has just gapped up quite dramatically. Well, not that bad, actually. We closed at 256.5, and we're now in pre-market at, well, it's quite a long way, $12. 268.5. So we're $12 up in pre-market, and that could be a good one. We'll keep an eye on that too. And then Tesla, I'm along on, as you can see. Didn't mention this earlier. I should have done that. We've got that one's quite well out of the money, and these two are about at slightly in profit, just slightly into profit, just above break even. So I'm long on Tesla, but short on the NASDAQ. One of them should work out. Whichever one doesn't work out, I'll be hedging or stopping out. And then I'll be looking to maybe buy MSTR, buy Coinbase, Apple, also looking for longs on Apple. But if the market does pull back overall, and of course we've got to be watching the NASDAQ and the S&P, the VIX, all that sort of thing. If the market is going to pull back, then all of these other names could pull back a bit too, and we may get a better chance to buy them lower down. Have we talked about Bitcoin? No. So Bitcoin and Ethereum and XRP are all on the move. By the way, before I start that, we got out of our gold trade. We got out of our silver trade. I don't know which way this is going to go. We were long on silver. We got long at about 32.20, I think. And we got out at about 32.89. So we got out of our long silver trade, looking a bit toppish. And of course, we got that big spike high on silver over there, which is very worrying for those who might be still long. I don't think that's a big problem. I think we could continue to move up from here, but I just don't know. I'd like to see how this weekend and today particularly closes off and where we end up with gold and silver. There's all sorts of rumors floating around about not enough gold bullion and Fort Knox and moving all the gold out of the vaults in Switzerland into Fort Knox to cover up for this audit, all sorts of weird stories. I don't believe any of it, and I don't pay any attention to any of it. But what it will do is put some consternation into the gold and silver markets, or metals markets generally. And so we've got to be careful. I'd rather just sit this out until we find out what's going on this weekend. When it comes to Bitcoin, Ethereum, and XRP, though, all good. I think we might have to spend a few more days here on Bitcoin, moving sideways. I'll tell you why. Not just because everyone's calling for a cycle low. I'm fully with cycles, no problem with cycles, but it's not something that I generally trade off. And the cycle low, funnily enough, begins or starts, I believe, just about when we reach the apex of this triangle. That's like Monday or Tuesday next week. It could be that if we are going to break out, now we've got a very neat technical pattern. We've held this long-term purple trend line, barely. We did have another little spike low there. I bought some more there, of course. I've been buying all of these dips, basically. We've had a fantastic run in Bitcoin. Can we get the next run going up now? Now, it's a wonderful technical pattern. We've got all these moving averages in a cluster that we're busy busting up through right now as we speak. We've got this tiny little channel just above us with a trend line at the top. And then we've got this apex of this triangle, which just about coincides with what people are calling a cycle low. So we could just bust up through here today and start moving up. My target starts at 140, 140K, then 160, and then 180. I'll probably be taking off those tranches at those levels as we move up. If we get up there, of course, the alternative is, of course, that we just don't get up. And this market maybe reaches the top of that trend line or channel line and starts doing something like this. Now, we don't want to see that, of course, but I'm going to put that in there as an option or alternative that you need to be aware of as a possibility, because if this does start happening, you're going to have to start getting out of your positions on a break below that red line, or at least hedging them if you don't want to do that. I'm more likely to hedge than to get out of my positions. I believe hedging is a superior way of trading from various aspects. If you want to know more about hedging, there's a couple of videos on this channel about hedging. And of course, you could take my swing trading blueprint course where I go into hedging. And I'm also releasing a natural gas course in March, folks. Excuse me. I think I've got a bit of bacon on my tooth from breakfast. I'm releasing a natural gas course in March, sometime next month, probably towards the end of next month. So keep your eye out for your email inbox to find more about that, or any news on this channel or on my X channel at ArcisFX. So those are my targets: 140, 160, 180. If we do start breaking down here, I will hedge. But if we break up through the top here, start moving higher, I may even add to my already reasonably substantial size in Bitcoin. I think we could move up. We've had consolidation since November, beautiful length of consolidation, almost feels like, not quite, almost as long as this previous one. If you remember, this went on forever. This could carry on going on for another 3 or 4 months, just like it happened on the last round. But it looks like we are going to try and make some moves up right now. We're now trading at just under 100,000, actually, 99, yeah, 99 and a half. So I was just checking, I've got 2 different feeds on Bitcoin here. So it's looking excellent. I'm very happy with that. And we've got a decent position on there. As we have on Ethereum, I'm out of the money on Ethereum still. I've still got 1 tranche from up there. This one's in profit. That one's out of profit. And so generally, still overall, this is not in profit. But that's also looking fantastic. I do like Ethereum the most out of all of these, perhaps XRP too, because of the severity of this spike down. And you'll remember it if you were trading this, because an awful lot of traders got liquidated by this move. I added some more on there when it started carrying on moving much, much further down and much more rapidly. I was obviously a little worried, but it didn't last long at all. If you look at this on the 4-hour chart or even the 1-hour chart, it was a very brief spike down. And now we're just curling up beautifully, a smiley face, and we're hopefully at some point going to close above the 200, which is this purple one, and then above the green line. So Ethereum looks good, as does XRP. Notice the small size of the spike on Bitcoin over here compared to XRP and Ethereum. That took place on the 3rd of February. So that's already 2.5 weeks ago. So massive spike down. We bought some more there. Much like Ethereum, it carried on moving down. Got a little bit worried on that, although we don't have massive positions on this one either. We've got most of our size on Bitcoin. So that's all of that. So nothing on any of the metals. We got out of palladium. We got out of platinum. We took good profits on both of those. We took some good profit on our gold longs, but that was a while back, about a week ago. And we also took a little bit of profit on recent silver longs. And I'm waiting to see what happens with those. All right, folks, now let's carry on. We're running out of time very quickly. Just want to quickly have a look at this chart. We went long on the VIX a few days ago, 2 days ago. If this market does move down, the VIX should move up. We've got another flat bottom here. Lots of flat bottoms on these charts today. So we can just draw one straight across there. And because of that, whenever you see a flat bottom like this, you can see it extends all the way back to September 2024 and probably before that as well. Oh yeah, it's a very significant level. Look at it, all of these touches on the same level going back to 2023, 24, 25 now, and right on that level. So probably we'll have to get a little spike down. And I had this red line drawn in here from a long time ago. I'm going to pull it across to where we are currently and allow for this sort of thing to happen. All right. So because of that flat bottom, I expect that we may have to just have a squeeze down through the bottom, not a short squeeze, but the opposite of a short squeeze is a long squeeze, but no one ever says that for some reason. But that's the definition, a long squeeze, boom, down, back up again, something like that. All I've done is I've shifted that arrow along my squiggle, and my squiggle says that's what could happen. So there we go, my definitive, authoritative squiggle. TLT we're long on, as you know, I think. Just waiting for the 10-year yield to carry on dribbling down. I'm probably going to get out of this trade at 90 or 91. We've been in this for too long. I'm setting a time stop on this. It's boring me, and it's tying up resources that I could use elsewhere. So as soon as we get up into about 90, 91, into this region here is more or less where we got into this trade, excuse me, long, and I'll be getting out of that trade at break even if possible. I just think this could take months and months and months and years, maybe even, to get up back into a reasonable sort of level. Look how long we've been down here. You would never have thought this. Going back to 2022, that's how long we've been stuck here. Just boring. We have, however, we've broken up through this downward sloping trend line, but we're below all the moving averages. We've got a much longer term trend line above us, much up, this one up right up here, and just super low and not moving up. And I don't know, with the current deliberations on interest rates and money flow, money supply, whether this has got any boom in it in the near term. I really don't know. Seems like inflation might be making a bit of a comeback, which will keep this probably down for a long time. We have nothing on the rand against the dollar. So VIX we're long, TLT we're long. Going across the softs and grains, and those of you who are trading cocoa and coffee, and thank you very much for all of you who have followed me on these and stood by my my trading approach to this, because these two are probably some of the biggest trades, or the biggest problematic trades that people have faced recently. And people ask me every day, what's happening? What are we doing with cocoa? Are we hedging, unhedging? Well, as you know, if you watched the last video and some of my tweets, we're completely unhedged. We could have unhedged back there, right? At that island reversal. Didn't do that, unfortunately, but I did unhedge over here. So we're now short on cocoa. This is cocoa. We're now short on cocoa, unhedged. We can remove that. And so roughly speaking, we've got a position from there, and that one there, which is still out of the money. I don't know exactly what our precise average price is. It could be a little higher than that, actually. It might be, I can't remember. I'll have a look at it later. But this is the sort of path, and we are following it more or less. We did go a little higher than I expected, formed that island reversal, got down here, bounced back up to the underside of that, formed a reversal candle. That gave me the unhedging signal, made us fully 100% short, and we're now heading down. That's where we are currently, all the way down at 10,000. Big round number. Be careful of a little bounce here, perhaps back up to the underside of that trend line, and then a move down, all the way down into this pink zone, double bottom and rising trend line, and downward sloping trend line. That's the perfect target, and that will take place on the 22nd of May, 2025, if we follow this path down to the price of 7,000 on cocoa. So for those of you who managed to get through that trade, it was tricky, it was messy, it was difficult. Some of you put your trust in me. I appreciate you for that. And well done on not panicking. A lot of you remained calm. I know some of you out of the money with too much size and so on. We've had a lot of chats with different people, but most of you managed to, I think, navigate through this with a little bit of help, and we've been able to help quite a few traders get through this. Same thing on coffee. We're now completely unhedged. That's our average price. We're moving down, and coffee is really, really simple. Look at this, guys. This is a fantastic, amazing technical pattern setup like we've seen on many, many charts recently. There's the breakup, false break through that rising short-term trend line. Little false break up there. We went short there, if you remember, on the touch of that trend line from the underside, but we did get a bit of a spook out there before dramatically collapsing back down again, forming a spike low and then a spike high up to the trend line, perfectly up to the same trend line. That's a one down, one up, followed by this big bearish candle that took place yesterday. That's where we are today. So a fantastic trade. It all worked out very, very well, and well done, as I said, once again, to those who managed to stave off the difficult parts of this trade. The target's very, very simple, just down to the top of the channel and that trend line and this little trend line somewhere down here. And if I was to draw a path, just sort of estimate it, be something like this. Okay, this is not going to be great, but you get the idea. It's not going to be overnight. It might be, but normally not. And we might get a bit of a dip, bit of a pullback, maybe even retest the underside of that green line. So this could be a little higher even, maybe, you know, like a retest like that, move down a bit further up, and then a squiggle down towards that trend line. So watch out for that sort of path. Bearing in mind, we may have to retest the green line after making a considerable dip, retest from underneath. Be careful of that. Don't let that spook you out. Until we close above that green line again, there's nothing to worry about on coffee. All right, and I think that's it, folks. Cotton, all right, let me just quickly go through these. We're long on sugar. Very quickly, let me take 60 seconds. Long on sugar, targets are there. First of all, we've taken one tranche off here. We're going to take another little bit off there, another little bit off there, and another little bit off there. So that's at 21, 21 and a half, 22.8. Those are our exit points, and we'll be out of sugar by the time we get there. And then wheat, we're also long, but we took 50% profit off there at 600, precisely at 600. We've dropped back down a bit. We'll look to add that on, maybe on a dip down to about 566, 570, somewhere down there, possibly even a little bit lower. We're looking to add that tranche back on again. That's wheat. And then corn, we're looking for a dip back down to the trend line and the flat top to get back in to buy some more. We've had the breakout, little bit of a pullback, not much. I'd like a more decent pullback to get long on corn again. And then finally, cotton. I did a video this morning, actually, a pre-recorded video. I recorded the whole thing and realized that the screen recording wasn't set on. And so I spent half an hour recording a video which went into the bin. But one of the things I focused on was cotton, and the fact that we've got this falling wedge. We've broken out through the top of it. We've now just fallen back inside. It's very, very cheap, folks, cotton. It's a beautiful technical pattern. We're at the lower Bollinger Band. We're at all-time, not all-time lows, but very, very close to all-time lows down here. We've got this falling wedge, this long-term trend line, and there we are bouncing off that trend line, off the bottom Bollinger Band, through the top, back in for the pullback. That's a great place to buy cotton if we close back above that falling wedge, for those of you who are softs and grains commodities traders. And then, and this little chart, well, before the market opens, I'm going to be doing a little bit of scalping, a little bit of day trading with folks. These are set up for my day trading. I'm not going to do that on this live stream, but if I do put up another live stream a little bit later or today, watch out for that. We'll be looking for opening period, the first hour of the market on S&P and NASDAQ. And as you can see, we're actually moving down. These are 3-minute charts. Got a few things on these charts, including VWAP, 20-50 period moving average, 1473 stochastic, and the MS OBs as well. But that's for another live session. And if I do that, it'll be impromptu. So watch out as I put the live stream notification up. That's it, folks. In a summary, so what I want to do quickly is to go through some questions and greetings. Good day, Jesse. Wonderful to have you as a member. Awesome stuff. We talked about natural gas already, Jesse. Yeah, we've covered natural gas. Good day, Zed Pepe from Alberta, Canada. Wonderful to have you here. Good day, Robson. What is the situation on the VIX? I think we've covered that. If you've got any further questions on the VIX, just let me know. I'm stuck in the copper range long. That's from HR. Stuck in the copper range long. All right, let's have a look at copper quickly. Let me choose a chart to use. Let's put it on here. What are we going to use? FXCM or Pepperstone? Let's use FXCM. You're stuck long on copper. All right, so I don't know about copper. You know, Dr. Copper, notoriously predictive of the way the overall markets are and likely to be. Copper demand in building, electronics, computers, you name it. When copper demand goes up, it's normally the sign of a bullish market overall, in just business-wise, in the economy. When copper goes down, it normally either front runs or follows a decline in the economy. So I don't know which way the economy is going. I don't think anyone does. A lot of bulls and a lot of bears floating around on both sides of this, and all sorts of reasons to be bullish and bearish. But here's copper, and I don't know where you got in. HR, I don't know what price you got in at, but I would say, you know, as long as we're holding above $4.46, this red line that I got on my chart, we should be okay. And what it looks like actually is we've got a nice triangle breakout here. I'll just put a flat line at the bottom there. I haven't been trading or watching copper for some time, so forgive me if I'm a little bit rusty on it. But basically, we got a trend line breakout. We've had a little retest on that pullback, and then we've got long. I don't know where you bought, but if you were buying, it should have been down here, or it should be at this red line. It's possible we could get to $4.46, or it's possible that we could hold where we are currently. There is a bit of support at this level. And if I just move this green line up, let's just put that there. Look at all the wicks we've got on the daily at this current level. Let's see if there's anything to the left-hand side where that green line is. And yes, there is. Lots of previous swing highs. So it's definitely an important resistance level. And right now we're resting on top of that with lots of daily wick low candles. So it's possible that we could actually just carry on moving up from here, and and we're forming a little bottom. If you look at this on the 1 hour chart, for example, you can see these big reversal. All the actions on the bull side, I do like all of these bullish engulfing candles on the hourly chart, and followed up by this little not engulfing, this little bullish candle that we've got going on this hour, this current hour. So all of the the volume and the drama on this at this level, at this current level, is on the bull side, all these big bull candles all engulfing the previous bear candles. So that's where all the action is on the buy side, and with a bit of luck, this will keep on moving up from where we are currently. If not, you'll have to allow for a dip back down to that red line. And actually, at the worst case scenario, bearing in mind that we've broken out of this quite long-term trend line, it is possible that we have to retest that trend line from the top again. That could take us below those lows. Never forget that a trend line, if it's retested, can take you below, way below the breakout point. And I'll show you how this might look. There's the breakout point right over here. But if we do pull back just to the trend line, you could have something like that, which takes you back down way below that breakout point, way below those swing lows, but still touching the top of the downward facing trend line. So that sort of thing could happen, and it does happen quite often. But at the moment, it looks like you might be okay. It's holding pretty well there. And as you saw from the hourly chart, there's a lot of buying interest right now at this current level, particularly shown by those big bullish engulfing candles. So that's copper. I hope that was helpful. Coffee. Yeah, we talked about coffee, Amit. I think that might have been covered. Amit, in the members group, do we analyze the positions on a daily basis? Amit, I put every single trade that I take, every single trade I put up in the members area in my private group, and I have a trade log. It's completely transparent. The moment I put a trade on, I put the trade up in the trade log. The moment I take the trade off, I take it off the trade log. I get called out if I make mistakes sometimes, which is very seldom. But sometimes people say, you forgot to do that, or you forgot to do that. I change it immediately. So I'm beholden to my members. They'll definitely point me out if I forget something or leave it out. And then we talk about trades. I put up charts and all sorts of things that you won't see on X and on YouTube. I cover in my private group too. So please feel free to join. It's 30% off at the moment. So, it brings it down to like $65 a month. And my feeling is you'll definitely save yourself $65 a month, if not make yourself $650 a month on the other side from learning how to trade in the group and being part of the community. Good day, Martin. You too have a fantastic weekend. Thanks for all your likes and comments on YouTube. I appreciate it, Martin. Thank you very much. The general shop. Hey, James, do you think natural gas will go down to 3.8 and spike up again? I think 3.75 is my target on natural gas. I don't know if it's going to get there. It looks like it's reversing at the moment, but still it's only a one up, one down, which is also a reversal pattern. This candle rolls, it's 1 o'clock. This candle rolls over in 45 minutes time. This candle rolls over as it is at the moment. It still looks like a reversal candle, a reversal pattern. One up, one down, and we could then carry on dribbling down. If not, I've got a pretty tight stop and reverse above here at about 4.6. Just above that recent swing high over here. So, if it goes up, we'll change our mind. If it goes down, all good. All right, Jesse, I believe BTC is ready to break up to the highs again. Should follow our old analysis. Basically is exactly where we said it should go and back up. Yeah, I think so too. Looking pretty good. JD, nice to see you, mate. Wonderful to see you too. Thanks for joining us. I really appreciate it. Jay Lee, I'm seeing 433 on natural gas. Is that the Henry Hub? Is the Henry Hub out of sync again? 433. No. Henry Hub's at 428. And the continuous here at Pepperstone is at 433, as you said. That's the continuous, the one in the middle. The one on the right-hand side is the futures at the Henry Hub. They are slightly different. Hi, Kaboni. Wonderful to see you, mate. Thanks for coming. Appreciate you. Thanks, Ray. Thanks for joining. All the best to you too. Have a wonderful weekend, all of you. Jay Lee, you're also from Canada. Long-term subscriber. How do you know the actual percentage drawdown on boil or cold? I don't trade boil or cold, Jay Lee. No clue. I mean, I know how they work. I know people that trade them. I occasionally look at them. but I don't get involved in them. I don't trade them. I don't have any interest in trading leveraged and decaying products. If you want to trade natural gas, in my opinion, and I could be wrong or just uninformed or old-fashioned, but if you want to trade natural gas properly, you should trade the futures mostly as much as you can rather than these contrived instruments. My opinion. JM, I'm stuck on a short at 265. Can you see a revisit to there later this year? Yeah, JM, I would imagine so, for sure. Yeah. Look, natural gas naturally rests. Natural gas naturally rests at about $2.50 to $3.50. That's its happy place. So I'm sure we'll get back there, but I don't know how long that will take. But probably, you know, I mean, probably in a few months' time, it could happen very, very quickly, straight away, or it could happen over time. But generally, $2.50 to $3.50 is where it should be. I'll show you this on the Henry Hub price. This is the day chart, straight from the NYMEX. And I'll quickly just show you by drawing a block around here, if I can find it. A rectangle. Let's just put it around 350 to 250. Actually, 375, and I'm going to call it 375 is really the top, but let's say 350, something like that, 350 to 250, even $2 really. So that green block that I've just drawn in there, let's make it a different color so it doesn't confuse everyone. Let's make it, I don't know, blue. That blue block there is natural gas's happy resting place, as you can see. Spends an awful lot of time down there. Occasionally we deviate out of it and then back down again. Sometimes much, much lower below it. But yeah, so that blue block is where we should return to at some point. We're not far away from it right now. And there's every opportunity for us to get back down to $2.60 or $2.50. And it normally does. And it will do at some point. But maybe not this month or next month or the month after. I don't know. I'm not into predicting markets. I just really follow what they do. $4.60 was your entry. Fantastic. That's a short, I'm assuming, on natural gas. So you got in better than I did. I did much earlier price. Fantastic. Great, Amit. Wonderful. Looking forward to seeing you in there, mate. So all of you who are not members at my private group, follow Amit. He knows the way. Follow him in through the door. Okay, thanks, JM. Okay, folks, thanks very much. If there's any other questions, anything else you'd like to ask, now's your chance. We've got about 3 minutes, and then I have to get ready for the opening range or the opening market. Let me just quickly show you while you're here. One of the things I'm going to start doing, perhaps thinking about it, is doing the sort of opening of the US market day trading setup. And so I'll be looking for trades within the first hour or two of the US market. This is not something I normally do. It's something I used to do a long time ago. But there's a bit of a demand for it, really, and something I might consider. So this is basically my chart setup. If you want to be day trading, scalping the indices at the start of the US market, these are some of the setups you could use in your chart. I've got the 20-period moving average, the blue line. The 50 is the red line. And these are just for support and resistance. No crossovers, nothing weird like that. Just support and resistance line. The orange line here is the 20-period. You could use the 24-period if you want to. VWAP, volume weighted average price. And down here, I've got the 1473 stochastic. Let me show you there. Inputs, 1473 stochastic. All right. This one here is the 20-period VWAP, volume weighted average price. Stock traders like using that a lot. And then this is the 20-period moving average. There you go, 20 simple. And here is the 50 simple. Okay, it's lagging a bit. That's the 1473 stochastic. And then these green and other colored blocks are simply market structure breaks and order block. That's an indicator you can find on TradingView, in case you don't know about it. Let me just show you MSB, OB it's called. Chuck that on your charts. MSB. MSB, is it MSB? I can't remember now. Anyway, let's have a look. MSB-OB, that's it. So it's over here on TradingView, MSB-OB. There it is there. This one at the top here, I think. No, it's not that one. Anyway, I think any one of these, probably the middle one, market structure break and order block by E someone or other, Emery KB. That's the one I've got on my charts, the center one here, and that forms these green and sometimes red blocks if they're above you. These are market structure break levels and order blocks. You can draw them on yourself, but it's much easier just to have the computer draw them on for you. They're just simply areas of support and resistance. So pretty simple. That's all I got on my scalping or day trading charts, and we'll be talking about that at some point in one of the following live trades. Abomi, I'm not going to recap on natural gas. You can rewatch the video. I'm just about to finish, so and I covered it in quite some detail. And patience, quite correct, Walt. Be patient. Okay, folks, have a wonderful trading day. I've got to get my trade set up and preempt what might happen in these markets. So I'll see you in the next video, probably Sunday. Have a great weekend. And if you are in Bitcoin, Ethereum, and XRP, those are probably the best opportunities today to make a little bit of cash if they keep moving up. Be careful when we get to 100,000 though on Bitcoin, because it'll probably reject there and may squeeze further into that triangle, as I pointed out earlier. Okay, folks, see you in the next video. Take care.